Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. First up, in the European Union, there is a significant development. The number of bankruptcies surged by 8.4% in the second quarter. This increase marks the highest level since 2015, with the trend persisting for the sixth consecutive quarter. Turning our attention to Sweden, we see a robust growth story in the second quarter. Employment in Sweden expanded by 86,000 individuals compared to the previous year, and this brought the total employment figure to an impressive 5,315,000, with the average weekly work hours hitting 159.2 million. However, the unemployment rate saw a slight uptick, reaching 8.3%. Shifting gears to Canada, industrial and raw material prices are displaying mixed trends. July 2023 saw a 0.4% increase in the industrial product price index. However, compared to the previous year, the index dropped by 2.7%, highlighting the dynamic nature of pricing in the sector. In Germany, the manufacturing sector is making waves. Manufacturing order stock observed a 0.8% month-on-month increase in June. Notably, this boost was driven by the transport equipment sector. Amidst this positive momentum, the overall industry performance remains diverse. And now, let's discuss a global challenge with economic repercussions. Rising temperatures are intertwining with economies, creating a unique concern. Recent heat waves in various regions, including the US, Europe, and China, have led to an estimated 0.6 percentage point decline in the global GDP for 2023. This impact is felt through decreased labor productivity, especially in more vulnerable regions. This study emphasizes the need for adaptation measures such as urban greening and flexible working hours to combat heat stress and its subsequent impact on global productivity. Recent reports reveal a decline in Eurozone inflation, alleviating pressure on the European Central Bank to expedite rate hikes. July saw consumer prices rising by 5.3%, down from June's 5.5%. This shift prompts a closer examination of the European Central Bank's intense rate hike cycle, which aimed to address historical inflation surges. Despite this relief, underlying pressures remain substantial at 5.5%. The market continues to grapple with uncertainty, pondering whether another rate hike could still be on the horizon, possibly reaching 4% later this year. The European Central Bank finds itself navigating a complex intersection of signals. Strong underlying pressures and a tight labor market hint at persistent wage-driven inflation, while stagnant growth and the consumption point towards ease pressure. Annual inflation in the euro area has decreased to 5.3%, along with a drop to 6.1% across the EU. Belgium, Luxembourg, and Spain registered the lowest annual rates, while Hungary, Slovakia, and Poland marked the highest. In terms of month-on-month changes, annual inflation dropped in the 19 member states, remained stable in 1, and rose in 7. Shifting our focus, we land in Luxembourg, where the unemployment rate remains steady at 5.2%. This sustained rate underscores the country's resilient economic environment. Let's now pivot to the global steel industry. The July figures are in, revealing a remarkable surge in worldwide crude steel production by 6.6% year-on-year. A substantial 158.5 million tons were produced across 63 countries monitored by the World Steel Association. China continues to lead the pack with an impressive 11.5% growth, while other significant steel producers like India and Japan follow suit with growth rates of 14.3% and 0.9% respectively. However, South Korea experienced a 9% drop in production. Let's explore the economic landscape of Japan. S&P reports a pickup in Japan's GDP for August. The service sector's solid performance offset a decline in manufacturing. The flash PMI data suggested growth within Japan's private sector economy gained momentum midway through the third quarter. This expansion continues the growth streak initiated earlier in the year. While services activity contributes to this growth, manufacturing output remains in contraction. Moving on to New Zealand, where robust earnings growth is taking the spotlight. According to the latest data from the Stats New Zealand, there is a substantial surge in earnings. Median weekly earnings from wages and salaries experienced a remarkable 7.1% growth over the year, reaching an impressive $1,273. Notably, women's earnings exhibited particularly strong growth at 8.1%. Now let's turn our attention to Turkey. In a glimpse of economic diversity, there is a 1.8% dip in new companies and a remarkable 71.5% surge in cooperatives. Embracing the allure of Southern Europe, we explore its thriving tourism sector. Despite increasing costs, this region is enjoying a prosperous year for tourism, particularly in beach vacations. Portugal and Greece stand out, exhibiting robust bookings and surpassing 2019 levels. What's remarkable is that even with escalated expenses, the region remains relatively affordable, making it an appealing choice in comparison to more distant destinations. This tourism boom, a significant contributor to GDP, has played a pivotal role in economic recovery, leading to revised growth forecasts for Portugal and Greece. However, the reliance on tourism necessitates careful consideration, calling for diversification efforts and infrastructure enhancements. Shifting our focus to the Netherlands, unemployment dynamics come into view. From May through July, unemployment, particularly among young people, recorded an uptick, rising from 7.9% in April to 8.6% in July. Going to Turkey again, consumer sentiment is in focus. The Consumer Confidence Index is reported at a one-year low of 68, reflecting the current consumer morale. We set our sights on Belgium's business landscape. June witnessed a northward growth trend in the number of VAT-registered enterprises, marking an increase compared to May. This growth is the result of 6,750 new enterprises. Exploring the dynamic energy landscape, we uncover the rising popularity of power purchase agreements, or PPAs, within the EU business sphere. As sustainability takes center stage, businesses are embracing PPAs to meet their energy needs responsibly. These agreements involve direct purchases of renewable energy from generators, fostering stable electricity prices, reduced carbon footprint, and improved energy security. Beyond financial gains, PPAs align with corporate social responsibility efforts, attracting eco-conscious stakeholders and nurturing nurturing renewable energy expansion. Demonstrating commitment to the EU's climate goals, PPAs are not just energy solutions, they are pathways to a greener future. Shifting our attention to Turkey's eastern Black Sea region, we witness a remarkable surge in exports. The provinces within the Eastern Black Sea Exporters Association, including Trabzon, Rize, Artvin, and Gümüşhane, achieved a total of 510 million in exports during January to April. This robust performance marks a notable 10% increase from the previous year. Among these provinces, Trabzon's exports witnessed an impressive 25% leap, while Artvin's figures rose by 5%. Key export destinations include Russia, Italy, Germany, Georgia, and Poland, each with varying growth rates. And shifting gears to Denmark, we delve into consumer sentiment. In August, a drop in consumer confidence took place, falling from minus 10.1 in July to minus 10.9. This shift reflects increasing pessimism among Danish consumers, primarily attributed to diminished expectations for the families and the country's future economic situations. Next on our radar is Spain's business turnover landscape. We observe a monthly dip of minus 1.2%, along with an annual rate at minus 5.8%, providing insights into the dynamic business trends within the country. Steering our focus to Germany, we find a pivotal insight into its business environment. Latest HCOB Flash PMI survey compiled by S&P Global reveals a significant downturn in German business activity. This decline, the steepest in over 3 years, paints a picture of the current state of affairs. A glance at the August oil market report unveils remarkable insights. The global oil market paints an intriguing picture with record high demand attributed to strong summer air travel, increased power generation, and robust Chinese petrochemical activity. Supply, however, saw a dip fueled by OPEC Plus cuts and a drop in Saudi production. The report highlights peaking refinery outputs, tight product markets, and a surge in oil prices. Next on our radar is Norway, where labor dynamics come to light. Statistics Norway's labor force survey statistics revealed a slight increase in the country's unemployment rate in July. This marks the second consecutive month of rise as the seasonally adjusted unemployment rate inches up from 3.4% in June to 3.5% in July. Turning our attention to Slovenia, consumer sentiment takes center stage. In August, we witnessed a dip in consumer confidence, but there's an intriguing twist. While August's consumer confidence experienced a slight dip, annual optimism makes a significant surge by 5 percentage points. And lastly, going to Serbia, where the influx of foreign workers is a notable trend. Over the past 8 months, Serbia has welcomed a staggering 32,000 foreign workers. This surge is driven by the demand for labor across diverse roles, showcasing the country's growing need for a skilled workforce. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.